right. Good morning. It's Monday, October 27th. All right, guys. What we're going to do is I'm going to do a little bit of a live stream, and we're going to look at the market before the market opens. And I don't know if this is part of your ritual or not. As a trader, it really should be, which is how do we look at the market in a way that helps us to find opportunities once the market opens. And some of you may trade this transition period, and that's okay. So what I'm going to do is show how I go about prepping for the market and how I go about looking at market behavior before the market actually opens. I like to do this, sometime anywhere between let's see, Eastern time, like 7:30 Eastern time, and like basically now. So almost, we're kind of getting close to 9 o'clock. And I'll explain why. I have a very specific methodology I use with how I look at the market and how I look at market preparation. And this methodology is based on DRIDR. So you can search that, look it up, look at my channel. And basically, DRIDR is a way to look at market structure. And you're usually looking at the first hour of 3 different sessions. So you have the Asian session, and the Asian session is, basically 1930 to right here, 2030. That's the opening hour, and that forms the DRIDR range. And then the overnight session, which is also the European session, forms between 3 a.m. and all this is Eastern time. So everything I do when I talk about charts, I'm talking about Eastern time. I actually live in Central time zone, but I'm going to talk about Eastern time here. And so we start at 3 for the overnight session and go to about 4 o'clock is the first hour. And that forms the DRIDR range. The whole session for overnight goes all the way up until 8:30 in the morning. And so at 8:30, we kind of have this transition period where we're kind of waiting between 8:30 and 9:30 for market to open. Now, I have 17 years worth of data and a tool that's based on machine learning that tells me what's the highest probability of structure that's going to form in that first hour for the opening of the New York session. And I can base it off of the structure between the ADR structure and the ODR structure and what happens in these sessions to get very high probability statistics around what's going to happen at 9:30 in the morning from 9:30 to 10:30 Eastern time. And there's really kind of several things that could happen. So let me just kind of explain what could happen. So let's just say this is 9:30. Okay. I'm gonna kind of just create these boxes here. Hang on a second. Actually, let me just do this. This is a little easier. All right. So 9:30 to 10:30. Let's go right here. Okay. We could have a box that forms like this, that is entirely above this. And so the price action would look very much like we come up here, we come up, we hold this, boom, 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 something like that, right? That would be the price action. And between 9:30 and 10:30, we never cross this ODR structure. So that's one. We call that a UXP. Okay, so let me put these down here. So structures are, that's UXP, upside X plus. Another structure is when we're kind of doing this. We're above the midline of the prior structure, below this, this is called the IDR level right here. And then we're kind of above it too. So we're kind of like straddling this IDR level here, but we haven't crossed below this midline. Okay, that's still an upward movement. So we might have done something like this, right? Where we came up, came down, and then we never quite crossed the midline. A lot of times what you'll see is we'll actually hit the midline and then bounce off it. Okay, so this is called a UX structure. It's still an upward structure, but it's a little bit weaker, right? And then obviously we have this structure where we kind of come way down below. Okay, so that's a what's called an upside. And so we've got that. And these two, upside and upside X, these are probably the less frequent. So you see these less frequently. You'll see this more frequently. And then this is a little bit more rare where you'll see this. Now we can also do this. And this is a pattern called range expansion. Okay, because we're basically expanding the entire range that was formed during the ODR session, right? We're spanning from top all the way to bottom. Okay, in this case, we probably went somewhere all the way down here. Okay, so that's called range expansion. And then we just kind of take it down the other ways, the inverse. So remember this is the opposite of what we saw here with the upside. So this is actually would be a downside model, a downside formation here. And then let me give this a little more room to work with. And then you can see we've got this right here. So this would be a downside X, downside X. Okay. And then just like that first one that we saw, but going to the upside, we also have this, which would be a downside X plus. Okay. Let me get rid of that so it's not confusing. So this would be a downside X plus model. Okay. And so it's helpful to know how the structure of the day is going to form, because it helps me, especially if I know that we're going to get, say, for instance, a range expansion day, then I know that when we start if we start making a low right here, I'm not betting on it doing this. I'm betting on it coming back up into here and then doing this, right? And so this lends itself to more fade opportunities, looking for more reversal fade opportunities. Whereas, if I'm looking at something like this, right, I'm looking for it to take off. So this helps me with context. It helps me with directionality. It helps me with timing, right? Because I kind of know certain things are going to happen within this 9:30 to 10:30 time frame. And so this is what I talk about when I talk about context and how I look at context. So let's just kind of do that for today. And let's talk about what the structure tells us from a data perspective. So if we look at ADR to ODR, we have what's called this UXP structure, right? We have the ODR session that's entirely above the ADR session. We didn't talk about confirmation, so confirmation is important. Confirmation is the directionality that occurred during that prior session. Okay, so in this case, in ODR session, our directionality was short because these levels are important. These 1 hour levels are important. So these edge levels, as soon as they get broken the first time and closed beyond the first time, now we have a directional bias. That's called a short confirmation here. Okay. This is an interesting one. If we kind of zoom in here to our ADR session, let me bring up a circle. You can see here, right here, we also have a short confirmation. That was the first one. This doesn't count because we didn't close. This is a short confirmation, but then we crossed the other side as well. And so this is still short confirmation, but we call this a false day. And we call it a false day because the structure broke. It failed. So if we had never broken above this DR high level, we would never have had a false day. We would have a true day. It could bounce all around here the rest of the time, but it would still be a true day. When we confirm one side and then break the other side and close to the other side, then we have what's called a false day. Okay, so if we use that principle and we look at ODR session, Okay, so we have short confirmation, came back up through, bounced all around. We did not close above this level. Look how good this level is. We came down into it. Then we came down, and then the session ended. And once the session ends, we no longer count that. So this was a true day. This is important. All right, let's go to our data. So we have upside X plus short confirmation. All right, let's just see. This is ES. So let's take a look at ES. So here's NQ. So this is the tool I have called Transition Explorer. And what we can do, let me just reset everything. So it's ES. Day of the week is Monday. And we had an upside X plus. And we had a short true day. Is that right? Let's see. Hang on. ES, upside X plus, short, true. Okay. So what our data tells us, this is our machine learning models up here. These are probability models down here. They're kind of basically saying the same thing. I just use these for confirmation. Just focus on these right here in the middle. So 43% of the time when we have a Monday UXP short true day, we will have a DXP formation. Okay, so what will happen is we will have a formation that will look like this, something like this. Okay, so we're expecting, okay, without looking at any other data, we're expecting price to drop. So we're looking for shorts. We're not looking for it to come up into this area at all. We're just looking for shorts. Okay. Now, come back here. One thing that we have to notice, so there's another feature in here, which is it's important when after 8:30, if price starts below, so we actually started right here at 8:30, so 68.8150, and we actually crossed back into this IDR range for ODR. That's significant. So it's significant if it crosses back into here after 8:30 or above here after 8:30. I'm going to show you what the data does. It's very significant. So if we come back here to the data, my open location was below, but I breached the IDR. And now immediately all of our data says range expansion. We're most likely to get a range expansion here today. Okay, what does a range expansion look like? Remember, it's this one that spans the entire range. Okay, so now I'm looking for edges. I want to be trading at the edges. I'll be trading, when it comes down here first, then I want to be looking for longs going back up. If it comes up here first, I'm going to be more aligned to looking for shorts. Obviously, these are probabilities. These don't always work out. There's still room for upside X plus, downside X plus, downside X, downside, like all these models are possible. Now, what if we never break the midline? Okay, because the midline's important too, right? What if we just kind of dink around in here, when market opens, right? And we never actually break this midline right here. Well, if we mark this as false in the data, now 67% of the time we're going to get a downside X. Now I only have 6 records, so let me take the day off. 34 records, 79% of the time we're going to get a downside X formation, which is this formation right here, right? We never actually break this midline. And when I mean break, I mean close above. Okay, now if we close above this, let's go back to here, take this off, market is true. Now we have a 58% likelihood that we're going to have a range expansion and a 25% likelihood that we'll have a downside day. And those numbers change if we look at Monday. So 64% likelihood of a range expansion. And that's kind of what I'm thinking today. I'm actually thinking we're gonna break this. So my thoughts are this is our prep for what's going to happen. We're going to have a range expansion day. I don't know whether it's going to go up first or down first. We have this massive gap from overnight. Okay, so just notice we have this massive gap. We have the Fed rate this week, all kinds of crazy stuff that's going to go on. So that's my pre-market prep for today. Is I'm looking at range expansion. So when market opens, I'm not going to trade in the middle. I'm going to wait for moves that come out of this middle section. And then I'm either going to trade looking for opportunities going back the other way, or it still could fail and I still could get something like this. And then we kind of go down the rest of the day, or, we kind of do this and then we go up the rest of the day. So I need to be more context aware when I'm looking at a day like a range expansion day. All right, just for fun, let's take a look at NQ really quick. You always think like, okay, NQ and ES should be the same. That's not true. Sometimes they're different. And we actually have a very different day for NQ. We have the kind of the same idea. So if we look at this 5-minute structure here, then we are upside X plus. We had a short confirmation, false day, and we opened above. We haven't actually even breached into here yet. Okay, so if we look at our data, let's go into NQ. Monday, upside X plus, short, false, and then we open above. Now we're getting to a little bit of, like, we need more data, right? We got 50% of the time it's range expansion, 42% of the time it's upside X plus. Could go either way, right? If we never breach the IDR, then we're looking at upside X plus. Let's take Monday off so we get more records, okay? If we do breach IDR, now we're looking pretty heavily at range expansion, right? And so this level right here becomes really super important to watch between now and when we kind of are forming all the way up until 10:30. So between now and 10:30, I'm going to really watch, does this level hold, right? My bias right now is up generally, but once this comes down, my bias is going to be absolutely short. Okay, so if we look at see anything like this, then we're expecting this all the way down here. That's what we're looking at. So that's kind of my context. This has been long enough. So as I do this more frequently, I'll talk a little bit about trade ideas and setups and kind of what I'm looking at and those kinds of things too. But this was just a little bit of a primer on how I use data and machine learning to help look for high probability contextual narratives for the day. All right, go out there, kill it, guys. Go kill it today. Good luck in trading. Have a great day.